He's the trader that called the gold breakout of the summer. So where does he see it headed now? Todd Gordon is the founder of tradinganalysis.com. He's also a frequent contributor on CNBC, and he joins me now. Todd, welcome to the show.
Thanks, Daniela. Nice to be here.
So once in a while, you traders get it right.
Oh, wow. First interview on Kitco, and she goes right for the dot.
No, it's a compliment, Todd. Congrats on calling that breakout.
Thank you. But as a trader or an investor, it's not how often you're right. It's how you contain risk. And then when you're right, it's how you push the upside and kind of maximize that reward.
Well, more importantly, Todd, where do you see gold headed now based on your analysis?
Sure. So Danielle, I trade with a fundamental and more of an intermarket background, kind of a global macro approach. But of course, you time the markets if it's able to be done. You get context with technicals, and specifically, I love Elliott Wave in terms of getting that context. It's been an amazing triangle since 2016. Very frustrating for a lot of gold bulls. Finally, we just went. The technicals say that unfortunately, I don't think this is the birth of a new gold bull market. I do see upside, though, into the 15s, into the 16s, potentially 17. But unfortunately, I think at that point, the Fed is going to start to reverse course, forced to get a little bit more hawkish. And I think that might choke off that gold rally. As I said, I don't think we're set to do 2,000-3,000 in gold.
Well, I know there's a lot of investors that would take the 15, 16 here, Todd. You know, after, as you say, a really long and dry run here for the metal. But in what time frame are you seeing those levels?
You know, it really could be just the next 6 months, 6 to 12 months.
Okay.
You know, I think as fast as the Fed just did an about face in terms of being hawkish, raising in 18, and now we're trying to cut with the stock market at all-time high. You know, you look at the bond market. The bond market, the 30-year bonds have been up for 38 years, almost 4 decades. We tried to break down interest rates, tried to finally find a low, but I think that was a false break, and we're coming back. Bond market up has a solid correlation with the gold market. And what's interesting is I keep saying equities. It's like gold, bond, and equities are all going up. But I think at some point that those inflationary threats going to start to come in, and the Fed's going to have no choice but to hike.
And I'll add another layer there: gold, bond, equities, and cryptos keep going up. Are you surprised by that scenario?
I don't know, Danielle. Will you tell me if, in fact, there's a correlation between cryptos and gold?
Not that I see, Todd.
I know everyone has an opinion on that. I don't know. I mean, there's certain times where risk tolerance is strong, risk appetites are strong, and people are willing to kind of re-engage with cryptos. That's the best I have for you. We don't have any quantifiable evidence to suggest there's correlation.
Right. But with more people viewing stocks as overvalued, you know, do you think, Todd, I know that Wall Street doesn't necessarily love gold, but could it become the next darling of Wall Street?
Wow. Possible if in fact bonds are going to make a new high, interest rates continue to catch, U.S. yields continue to catch down to the rest of the world as our rates compared to international rate differentials really started to diverge. If the Fed really is dovish to stay, inflation just does not continue to be a threat. We could continue to creep higher. But in terms of, you know, an outright explosion higher, if, you know, with a $4 trillion Fed balance sheet, if we didn't produce some inflation, I'm hard-pressed to believe that we're going to see that absolute run into gold. So
you feel good about the overall economy?
I do. I think, I certainly think that we have a Fed chair who is acquiescing to the tweeting requests of the president, although he claims his autonomy. We'll see. You know, there's less than 2 years until that next presidential cycle. We'll see what happens. I do see upside in the stock market towards 3,300. I think at that point, from a technical point of view, inflation will begin to come in. Fed will begin to tighten policy, and that could send equities back lower. So kind of like gold, I think, you know, we have another 20-30% on the upside, similar to equities, and I think there is a correlation between the two. Take for example, Daniel, Dow gold ratio.
Yeah.
That's a old Wall Street favor. We just saw, though, the two moving together, Dow and gold moving up, But if you look at that Dow gold ratio, we just made a lower high. Almost there's like a head and shoulders pattern in that Dow gold ratio. So I would actually start to say perhaps you see a little bit of outperformance of gold relative to the Dow. But, birth of a new ultra bull market, I don't think so.
All right. Well, Todd, finally, before I let you go, do you track the other precious metals? Do you see any good things in sight for silver, platinum, palladium?
I'm pretty much just focused, and I don't know. Can I kind of press my luck as a new guest on Kitco?
Absolutely. We'll see how the views do on this video, Todd.
Either this is going to be the first of many or the last for sure. I sent our show notes, as you and I were talking about yesterday. There was a nice setup in gold. In fact, I'm tracking it right here. Can I just walk through quickly what we're looking at?
Absolutely, please.
I'm bullish.
Yes.
I just want to put the trade on. I'm going to go put it on in our accounts here, send it out to our members. So you're looking at here the gold futures, and as I said, I'm an Elliott Wave guy, and if we could just take a look at the consolidation we've seen in July here, I think from an Elliott Wave point of view, it's about over. I've overlaid GLD ETF, which is on the left scale, gold futures on the right scale. We have a pretty good setup to take us up to about 1450 to 1500 in the futures, which equates to about 135 to 140 in the GLD. So what I was going to do is just put it on live, if that's okay. This is just my own PA. It's not like we're trading hundreds of millions of dollars here, but I'll just bring this over.
Yep.
And what we'll do, this is the Thinkorswim platform. I don't mind going out towards September to get this move. And if we just do a 135 on the call side, $2.90, just a nice little call spread, defining risk. We'll do a 135, 145. Actually, I said 140, didn't I? 140. I'm going to risk my typical amount. I'll just do a 10. Costing $1.25, and that trade is now working. So, and just filled. So near term, hopefully, that plays out. Risk is just about 13.75, trying to get up to about 14.75. So into September, maybe another $100 on the upside.
Right. Todd Gordon, that is definitely a Kitco News First, live trading right there. Very cool. Thank you so much.
Thank you for having me.
I can confidently say I think we'll see you soon.
Thanks. I'd love to be back. Thank you.
All right, Todd Gordon, thank you so much for joining us. And thank you for watching. We'll be back tomorrow.